the trades for the last 3 weeks. Usually we share 2. Once in a while, we'll share an extra one. What I wanted to do this week, we shared 2 trades, but I also wanted to share a hedging idea. This hedging idea is to protect the downside. I mean, it's literally all it is. It's insurance. And I only wanted insurance for this week. And I chose insurance in the Qs because of what we just went over with our new Hedge futures chart. And that Hedge futures chart where I was showing where NASDAQ is expensive relative to the other indices. Now, also, right now, we have NASDAQ coming up to the 100 and 200 period moving average. Now, is this a big deal? Well, some stocks, it's not that big of a deal because it happens all the time. But when you see a name or an indice that this has not happened in a long time, it is an incredibly significant event. And I'm not talking about the crosses so much as I'm talking about them getting closer together. Markets do not stay around big numbers, guys. I've been saying this since 2015. So as we get up here, I think it absolutely behooves us all to make sure that you're protected. Okay?
It's kind of like the yield curve inverting, Jonathan. The spread between those 2 lines is getting smaller and smaller and smaller to the point where it may even, quote unquote invert, assuming, yield curve-ish type of thinking. And that's when things get crazy and you're seeing that market doesn't like to stay around round numbers. It makes a lot of sense.
And 2, it's more of, hey, take a step back, look at the market from a bigger picture perspective. And I think that if you do that, and if I put this on, go back and look at the behavior around these big numbers. And we don't talk about them often. We only talk about them when they become what we call in play, right? When they get closer to them. Very, very powerful. It is a phenomenal place. Even better, if you didn't do the trade this morning, I changed this a little bit because I came in and that's what these were trading at. The QQQs, I'm sure you can get a much better level now, but this trade right now, in my opinion, is awesome. Especially because it's already up a bunch. So you're getting in at a much better level. But for anybody who just wants to hedge this week, guys, I like it with 4 days to go. Anything here, love it.
And Jonathan, would you go into this trade with like a goal? So like, let's say for example, you risk, $1,100 on those 359 puts or whatever. Are you going into this with a goal like, all right, by the end of the week, if these things are up X amount, I'm going to take some profits, or
No.
How are you framing it?
I'm framing it that if the QQQs go under 300, then I'm okay.
Got it. But for others that don't have, let's say that long exposure, and this is more of like speculation or just a downside play.
So
would you recommend having like a goal?
I know right now I'm going to make a lot of money if we rally. I will. I'm going to make a shit ton of money if we rally because I have a lot of coin. I have a lot of Roblox. I'm trading my account around to finance this down move and add to my core holdings. But my risk, and I think your risk, is God forbid, I look at it like this way: if the Fed raises 3 full points, if there's a nuclear explosion, God forbid, I want to protect myself. If the Qs start trading down, I'm just going to be happy that my portfolio is protected. If I end up making a shit ton of money on this, all the better. I'm putting this trade on because I don't care if the Qs go up 300 points from here. or down 1,000 points from here. If I don't put this trade on, I'm fucked if the market gets crushed.
That's super important because you're doing this trade for a very specific reason. So just keep that in mind for anybody who's newer and hasn't really done this sort of a trade before. Keep that in mind.
No, and I genuinely appreciate those questions because it really does explain it and break it down. If I was flat and did not have a position and my account was $10,000, I would risk $300 or $400 on this trade all by itself, but not much more than that because it's speculative. The market's at 367 right now. You're only going to make money if it gets under these levels. So if I was flat, I wouldn't want to be all in on this. I like the idea for a little bit, but it's 4 days. It's high risk, high reward. It's more the market is rallying. And we say this often, get on prints. This is getting on prints in my mindset. Getting on prints means we just rallied from 320 to 367, lock something in, get on prints. I want you to be okay if we come back off.
So if you were long any of the names that are in the NASDAQ or correlated to the NASDAQ that have been doing really well during this bounce, that's sort of what you're alluding to. Long Twitter, long Roadblocks, long Ether, etc. Yeah.
I mean, it is, but also, so we have the SPY getting our high value target sell signal. And again, just like moving averages, if we just look at the behavior of the different signals, how have they worked in the past? I think that we could all, conclude that they worked really, really good, and we probably should be respecting them, right? So we have the SPY with a sell signal. We have the VIX with a buy signal. Again, just like the moving averages, how have these performed in the past? Probably need to respect them a little bit, right? We don't get buy signals very much. And when we do get a buy signal, it's expensive not to pay credence to these. So we have the VIX buy signal. We have the SPY sell signal, and we have the Qs getting to an epic level. We also know that the Qs are expensive relative to the other indices. So all of those coming together, not to mention the yield curve is inverted, the Fed's moving, inflation's high, there's war going on. All those reasons is why I think this is a gift to hedge your trading account.
Yeah, and going back to the VIX chart, especially with vol having come down, I mean we're getting to buy options at a decent price now compared to a few weeks ago where vol was elevated.
Yes, get on prints, vol. So what happens? Vol gets crushed, the market goes higher. Well, lock in profit. How can you lock in profit? Well, you can sell Twitter, or how about instead of that, you can hedge your account. So I think that makes sense. Pablo, great questions. I think the overall message is it's not just Qs. We could have done this with SPY, we could have done this with Russell. There's so many different vehicles you can hedge with. I like hedging with the Qs because where it's at with that moving average, and also I like the value of those options. So hopefully it helps. Spent a lot of time on that one. This is a key part in how we trade. I want to hold my longs, and this allows me that extra time. Does anybody have any questions on this before we go forward?